TradeFXDirect.com presents Why Forex Market Regulation Could Save You a Lot of Money. Despite the fact that the Forex market is the largest financial market, it still remains very much unregulated. It is also a rather important part of world economics if you consider that imports and exports are often conducted by using foreign exchange. In the past, it used to be that only banks and large corporations could be a part of the foreign exchange market. The availability of online Forex trading platforms has put this very important sector in front of millions of individual investors. It has also made it rather necessary to regulate the industry. The very nature of the Forex market demands that regulations be applied to it if the market is going to be a benefit to all parties involved. Let's look at some of the reasons why the industry requires regulation. For the retail trader's protection. Like we mentioned before, Forex trading has been made more accessible thanks to the introduction of online trading. Online Forex brokers have enabled millions of retail investors to get a piece of the action. Most retail investors are lured to the online Forex trading scene by the promise of making lots of money speculating on the market's movement. While there are retail investors who are using the high leverage offered by some brokers to make lots of money, most are failing. It's therefore necessary to regulate the industry to at least provide guidelines on the acceptable leverage levels a trader can use. Of course, this will vary from one country to the next, but most countries don't currently have any guidelines on such. This is why you can easily find a broker who offers leverages as high as 400 to 1. The biggest hazard for retail traders. While leverage can be dangerous to retail traders, most will argue that the opposite is also true. Leverage is what makes the industry lively and exciting to trade. This is also true for the experienced trader, which is why we don't think leverage is the biggest hazard a trader will face. This honour goes to the possibility of fraud on the part of the brokers, with the investors as their intended victims. An unregulated industry means that it's very easy for unscrupulous brokers to engage in fraudulent activities, such as charging exorbitant commissions and the creation of Ponzi schemes. This was clearly demonstrated when 26,000 retail traders were proven to have been fleeced of $460 million in Forex-related scams between 2001 and 2007. This example is just one of the many cases of fraud that are related to the Forex market. As much as retail investors should remain vigilant to ensure they are not signing up with a fraudulent broker, the industry also needs to find a way to protect the retail investors from such huge losses. The Commodities Futures Trading Commission, CFTC in the United States, set up such regulations in 2010 to protect retail investors. The rest of the world would do good to follow their lead. Do you think the industry should be regulated? Share your thoughts with us in the comments section below. You were listening to a TradeFXDirect.com production. 100% sharing bonus and 40% power bonus. Unparalleled trading. Join today at TradeFXDirect.com.